Blog Talk Radio.
Hello everybody, this is Patrick MontesDeOca with the gold and silver weekly swings trading instructions for the week ending October 24th, 2014. This segment is sponsored by the Equity Management Academy. On this segment, I want to take a look at the recent report that was published for next week, dated October 24, 2014. If you look at the updates on the left of the screen here, click on updates, click on the global VC price momentum indicator, and this will take you to this week's report. If you click on Patrick MontesDeOca name, you will receive all of the reports that have been published for the last couple of weeks. And if we take a look at this week's report, basically what it's telling us is that the market for gold and silver, particularly for the closing prices of October 24, 2014, as we move into next week's trading, the signals are automatically generated by integrating electronically weekly statistics with proprietary algorithms. These algorithms are going to give us a preview of what to expect for next week's trading. For the gold market, we use the weekly moving averages as an indicator in terms of identifying the momentum of the market. The December gold futures contract closed at 12:31 on October 24th. The market closing below the 50-day moving average of 12.79 is confirmation that the weekly trend is still bearish. But if it closes above 12.79, it tells us that the bearish short-term trend turns to neutral. So we want to keep an eye on a close above 12.79 for next week. The algorithms indicate that the weekly momentum indicator for next week is telling us with the market closing below the VC weekly price momentum indicator of 12.38, it confirms that the price momentum is still a little bit bearish. But if it closes above the VC weekly, it would negate the bearish signal to neutral. So a close about 12.38 is bullish, and it would negate this bearish sentiment that we have coming into next week to neutral. The weekly price indicator is telling us that because the market is bearish to neutral here by closing below the VC weekly price momentum indicator of 12.38, it could come down to 12.19 to 12.08, at which point it's recommending for you to cover your shorts at these levels and reverse long. And if you reverse long, then you want to put your stop at 12.08 on a good till cancel order, on a weekly stop. If the market comes down here and it goes through the 12.38 level, look to take some profits at the 12.49 to 12.68. So, in other words, the market is giving us an indication slightly that because of the close, and it could change if it opens above 12.38, on Monday, for example, where a close above 12.38 is bullish, and then you look to take profits at 12.49 or 12.68. So we want to wait until Monday, obviously, to give us an indication where we are. But at least we know that we have a bearish momentum coming in because of the close below 12.38, and we look to cover those shorts at 12.19 to 12.08 in reverse long. And take profits on those longs at 1249 or 1268. Crossing about 1238, if you buy long from 1219, you can add to your position if you want to trade multiple contracts. If you buy it at 1219 or in this vicinity between 1219 and 1208, add to your long position about 1238, or you can use this basically to reduce some of the profits, to take some of the profits that you would have at this point. But this is the weekly pivot point, an indication, the metrics that tells us the trend moving to an uptrend, and a close about 1238 for the week. Let's take a look at silver, and basically the weekly moving averages. The December silver futures contract closed at 1719. The market closing below the 9-day moving average of 1794 is confirmation that the weekly trend momentum is bearish. A close above the 9-day moving average would negate the weekly bearish short-term trend to neutral. The weekly momentum indicator is telling us that with the market closing below the price momentum indicator of 1729 for silver, it confirms as well that the price momentum is slightly bearish. But if it closes above 1729, it would negate this bearish signal to neutral. If the market comes in short on Monday, the weekly price indicator is telling us to cover short on corrections at the 1692 to 1663 levels, and reverse and go long on a weekly reversal stop. And if you go long the 1663, use it as a stop loss only for the week, and look to take profits at 1756 to 1792. You can also use the 1729 pivot point, weekly pivot point or metrics to lighten up or take profits if the market comes down and you buy 1692 or in this vicinity to 1663. But if it does close above 1729, it confirms that the market can rally up to the 1756 to 1792 level. Let's take a look once again at the gold market, and we will review the silver market and see what the market basically is telling us we can expect into next week. Let's review basically and see if we can add the weekly pivot points for next week. These are the algorithms that we basically are using for next week, that we just published here this weekend. And I want to take a look at the chart basically to give us an idea of what we can expect. On Friday, Friday the 24th, the market closed at 1231, and obviously the closing below the moving average here, it's showing that the market is a little bit bearish. So the objective of this signal, if it does materialize a follow-through to the downside on Monday, would be the first target of 1219, which is what the algorithm is recommending as the first level. Cover your shorts and to go long. The second level to do that would be 1208, and this will be the highest probability level to enter into the long side. If we come in next week and the market closes or trades above the 1238, it triggers the uptrend with a target of 1249 to 1268. If we come down into the B1 or B2 level early in the week and the market rallies about 1238, you can use the 1238 to unload some of the profits here that would be made by buying the B1 or B2 level. And if you have multiple positions, you can sell the balance at 1249 to 1268, because closing about 1238 would be confirmation that the market is looking basically for these targets next week. So to recap, right now closing below the VC weekly price momentum indicator is slightly bearish, and it's suggesting if it comes down to that B1 to cover your shorts of 1219 and B2 of 1208 to cover your shorts, reverse and go long. If you go long, use the 1208 as a stop. If it crosses about the 1238 weekly pivot point or metrics for next week, it tells us that the uptrend is bullish, and the targets, your first target is 1249 to 1268. So let's see what happens here next week as we take a look at the action developing, starting on Monday. And we'll review this next week and see, pretty much how accurate this algorithm can be. Let's take a look at silver and see basically the same thing. What we can expect and what these algorithms are telling us. The silver market closed at 17.19, and let's see what the algorithms are telling us here. These are the same numbers that you see on the report, and so with the market closing below, obviously the moving average of 1794 up here, you can see that the overtone is slightly bearish. The market tried to cross that 1729 weekly pivot point or metrics, but it closed below there. And so it's got a bit of a bearish momentum, and it's telling us that this bearish momentum can come down to that 1692 level here, which is the buy one level suggested by the algorithm to cover your shorts and reverse and go long into this B1 or B2 level, and use the 1663 as your stop close only for the week. If we trade through the VC code of 1729 on Monday, it would set up a bullish setup for next week, and it would tells you basically the targets would be 1756 as your first level, and your second level would be 1793. If you come down to that 1692 level, reverse and go long or add to your positions that we are suggesting subscribers basically to use these levels here, B1 and B2 for the gold and for the silver market, to add to your long-term positions, as we feel the market, is setting up, I believe, the foundation to trade above the 1820 level and begin to set up the confirmation for what appears to be a head and shoulder bottom in this market. So for next week, let's recap. Closing below the 1729 indicates that the market is a bit bearish, and it could come down to 1692 to 1663, at which point it's telling you to have open orders to buy the market at these levels and use the 1663 as your stop. If it trades above the 1729 and closes above there, you can use this level if you bought the 1692, if it came down there, to take some profits, or the 1663. And if it does close above 1729, it's telling us that the higher prices could be on the way, and the next target above it is the 1756 and 1793 for next week. So let's review next week and see what the gold and silver weekly future swing trading instructions did for us as we come into next week. This is Patrick MontesDeOca